let's move on and let's talk about what else is happening within India Inc. And let me now welcome on board Amit Kumar Sinha, the MD and CEO at Mahindra Lifespaces, and chat about how their business has been. Amit, hi, morning. Good to have you on ET now. Tell me, with Chembur and Mulund together now adding to about almost 3,000 crore rupees of your GDV, how central is redevelopment to your growth strategy, and what share of your FY30 sales plan could it contribute to?
Well, thank you so much for having me. Redevelopment is a key priority for us. I think in the last couple of years, we have doubled down our efforts to really scale that business, and it has done really well for us. You mentioned 2 projects, but we have many more that we have won as well as in the pipeline. Our goal is to be the market leader, especially in the Mumbai context in the redevelopment space, and some of the latest wins reflect that. As part of our portfolio, we are looking at 3 markets: Mumbai, Pune, and Bangalore. Bangalore tends to be more outright sales. Sometimes, you'll have JDA kind of thing, but mostly outright. In Mumbai, you'll have more of society redevelopment, JDA, and outright. Our overall target is 1/3, 1/3, 1/3. 1/3 from redevelopment, 1/3 from outright, and 1/3 from other models like joint development models. So that's how we are building. For 2030, I think our hope is that the 30%, 33%, as I said, of the portfolio that we are developing in the GDV will become sales by that time. So 1/3 of our sales by FY30 should be coming from redevelopment projects.
Okay. So tell me, beyond Chembur and Mulund, and of course Malad as well, what's the pipeline firstly of redevelopment opportunities for you?
Yeah, so one of the other marquee projects that we had won recently is in Lokhandwala, Andheri West, which is quite prominent location in terms of prestige, in terms of the location, in terms of how the gentry looks at that market. So we're very excited with that location. We also have a redevelopment project on BIT, the BMC Investment Trust land in Mahalakshmi. That's also quite prominent location. We are looking forward to actually converting that into a marquee Mahindra Lifespaces project. So we have a good projects, and then obviously Borivali, which was the one we won last year. That again is a roughly 1,800-2,000 crore project. So if you count Lokhandwala, Mahalakshmi, Borivali, these are the other 3 projects that we have won in addition to the 3 that you mentioned. So a good portfolio that we have, and very excited to be launching them. Initial response from our Navy Malad project has been quite positive. We have learned a lot how to bring the redevelopment projects into the market efficiently. They are capital efficient, but takes a lot of time to bring them to the market. We have a dedicated team very focused on getting the right value proposition to our customers, our residents who trust us, and we'll continue to pursue that model very effectively.
Right, but along with that, the Asiana lease deal in Tamil Nadu is part of your residential scale up. What are the development plans on that land parcel? What is the nature of the project, and any estimate on GDV from that project?
Yeah, so that's a slightly different model. That's like you're selling plots to Asiana. So we have a lot of land in our Mahindra World City, Chennai, which is a thriving example of industrial, residential, commercial, schools, hospitals, hotels. So it's a thriving city. If you get an opportunity, I would love to have you guys visit that location, see how you can develop something in a public-private partnership. It's a partnership with Tamil Nadu government, done really well. As part of that, since we have a good amount of land, we have done plotted ourselves, we have done residential ourselves, but this was for us to work closely with one of our partners or a peer partner, Asiana, who's looking to develop a different segment of residential. I'll let them announce the details when they do the launch. But as part of that, we have sold a good amount of land parcel to them, so that it's part of the thriving Mahindra World City, Chennai integrated city complex. So that's a very nice project that they're likely to. We have done a land lease called land lease, but it's a land sale as a perpetual lease. So more than 100 crores is the size of the transaction.
Right, okay. And Mr. Sinha, let's talk about your developments in Chennai. You very recently launched 2 towers of an existing project called Lakewoods. So your tower H&I have been launched. Help us understand what are some early sales that you're seeing and what trends are you seeing in the for demand in the premium housing market when it comes to Chennai?
Yeah, so Chennai, as you know, we play only in the Mahindra World City Chennai location. So the land has been with us for almost 20 years. Lakewoods is actually an old project. We have been developing and launching different towers as part of our scale-up strategy. We waited for H&I, Tower H&I launch for some time because these are amazing. This is amazing value proposition in terms of what we provide there. Initial early days, we recently launched, not even a month. So early days in terms of the traction, but then there is a very healthy demand. And Chennai market is very unique. You don't have what we see in Pune, Bangalore, or Mumbai, significant launch volume. You have a lot of volumes come to you when their construction is in mid to halfway through, and towards the OC time, a lot of purchase happens. And it also works for us because land was already owned by us. We're just putting the construction money, developing a project that will be very attractive for customers. And these are not very high towers, so we'll quickly finish them, and hopefully we'll see a tremendous success in the towers, as we have seen in Tower A, B, C, D, E for Lakewoods.
But you added about 3,500 crore rupees in GDV, right, in the Q1 of FY26 alone. Tell me whether this pace can be sustained through FY26 to 27 as well.
Well, we have to. We are in a scale-up journey, part of Mahindra Group, part of 5X growth challenge. We are trying to not only meet, but hopefully exceed. That requires us to develop a GDV of roughly 45 to 50,000 crore at the earliest. And we are well our way in that direction, 40,000 plus already done. Last year was a watershed year for us. We did more than 18,000 crore, and the last year was 4,400. And prior to that, we had never done more than 1,000 crore in any year. So we've gone from less than 1,000 crore for many years to 4,400 crore to 18,000. And the first quarter was 3,500, and so far in this quarter, you've seen the announcement. We'll maintain the pace, and I'm hoping because the market is ripe, there is a demand. We've found the right niche for ourselves. Just society redevelopment is just an example of that. For us to be scaling our business, as we have emphasized in our external communication to stakeholders, shareholders, to even our customers, I think the scale up is necessary. We want to take this business to the next level, and the GDV addition will continue in line with our growth aspiration. But I just want to highlight, we will do deals that make financial sense. And we have to be always prudent about, this is a very unique business where sales come early and costs come later. And you have to be very careful about what could go right and what could go wrong in building these businesses. So very, very financially prudent about taking those deals. And that's how we see building our portfolio project that will be marquee project for customers, but also financially rewarding for our shareholders.
And Mr. Sinha, let's talk about your quarter one financials. Talking about your quarter one residential sales, they've seen a dip, but IC and IC has been growing steadily. 16.5% growth is what we've seen on that front in terms of revenue. Overall, for your business, how do you see the revenue mix evolving, and how does it alter or affect your margin profile, if at all?
Yeah, so just real estate, slightly different reporting revenues based on OC, which is when you complete the project, whereas most of the industry looks at pre-sales, and I think you're referring to pre-sales for our quarter. I think you're right. The quarter one numbers for pre-sale were lower than the previous year's quarter one, primarily because they are all launch related. So we had a very big launch last financial year in Q1. This year, many of the launches we are awaiting EC clearance, which was stuck for some time. It has come through. So you'll see the EC issue resolved, that it is already resolved. So all the approvals that were stuck are coming through. So we'll have a much stronger H2, which will show the impact of some of the launches that we had planned. So we'll continue to work towards that. In terms of bottom line, PAT, etc., I think that has been healthy in Q1. And our goal is to, as I said, create a portfolio where it's not only growth, but also in terms of profitability, it has to be healthy. So we're working on both those dimensions. The IC business continues to help us on the profitability side. IC business is also lumpy because you're selling land to MNCs, domestic industrial players. They buy over a period of time. And as the economic activity, the manufacturing activity happens, these land deals become very prominent. So we have had good start to the year. We hope to maintain the momentum, and it contributes heavily to our PAT. That industrial business is actually one of our crown jewel, and we'll continue to support that business as well as grow the business.
Right. Okay. Amit, great to have you on the show today. Thanks for your time and thanks for the invite. We'll definitely take you up on that.
Welcome anytime. Thank you.